Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London, and these are the stories that set your agenda. Asian equities gaining after softer than expected US jobs data revives bets the Fed will cut rates this year. The Israeli military asked some civilians in Rafah to move out of the city as the preparations for a ground invasion move forward. This after Israel closed a humanitarian crossing into Gaza following a Hamas rocket attack. Plus, Xi Jinping touches down in Paris to begin a three-nation European tour as French President Emmanuel Macron seeks to reset ties with Beijing. Let's check in on these markets then. US stocks ending last week higher with the gains coming through on Friday. The Nasdaq up by more than 2%. The S&P and in gains of a little over 1%. European stocks, though, ended the week slightly softer. Another big week in terms of the central bank story. The Bank of England, of course, and their decision on Thursday. Before that, the RBA of Australia coming through with their decision on Tuesday. Earnings also in focus with Disney in the US, UBS out of Switzerland, of course, tomorrow. European futures in the current phase of this morning, pointing high by 0.3%. It's a bank holiday, of course, here in the UK, so no trading here in the UK. But you're looking, if you strip out the FTSE 100, for gains of around 0.3%. Stateside, looking to build on the upside that came through on Friday. Again, the relief coming through from what looks like a slightly softer jobs market in the US, the print well below the estimates. Gains then of 0.1% being flagged by the S&P after the upside of plus 1% by the end of the close on Friday. Nasdaq futures, though, currently flat at 17,996. Let's flip the board and have a look cross-asset then at the currencies with a focus on the Bloomberg Dollar Index. But, of course, what is also happening in the oil markets given the geopolitics. The Bloomberg Dollar Index gaining 0.1% so far in the session. The pound in focus as we lead up to that Bank of England decision. We've heard relatively dovish comments coming through from the Bank of England Governor Andrew Bailey. Will that be reiterated on Thursday? 125 on the pound as things stand. And then oil prices edging higher, up 0.3%. We keep across the lines coming through from the Middle East, of course. 83.23 on Brent. Iron ore also getting a lift on additional support measures being flagged by officials in China. That is boosting property sector in China, but also giving aid to expectations that maybe there's going to be more demand for iron ore. Up 1.4% currently. We'll be looking at the basic resources, of course, in the mining space later in the session. Let's cross over to Asia now, where Avril Hong is standing by in Singapore. Avril, what is standing out to you across these Asian markets then?
Yeah, a couple of themes here. One of them is the extent in which mainland markets are catching up with their Hong Kong counterparts after returning from the long holiday, but also the reaction in the Asia markets to that softer than expected US payrolls report. We're seeing markets in the region mostly positive, but the CSI 300 has really been in focus. It climbed as much as 1.8%, but it is not as pronounced a move considering how Hong Kong stocks actually fared last week. The Hang Seng rally is taking a bit of a breather. Of course, this is all the reaction to what we got from that Politburo meeting, those pro-growth signals that policymakers are trying to find new ways potentially to fix the housing crisis. Still, that is seen as a tailwind. Let's flip the board because something else to consider amid all this as Chinese stocks get too cheap to ignore and corporate earnings have been fairly resilient is the Chinese equities, MSCI China specifically, the equities risk premium. That has widened a fair bit compared to some of its other Asian peers. So making the bull case a bit more compelling for Chinese equities. Flip the board again. I wanted to zoom in on that recovery we've seen in the dollar China as it's moved away from the levels from last week. This is, of course, the first chance for onshore yuan to react after the long holiday. It has been, although it has been trailing a bit compared to what we're seeing from the Fed. A lot of it was also to do with what we're seeing on dollar yen. So dollar China today hovering back towards that 7.21-22 level with those yield differentials between the US and Japan in focus as well. Tom.
Avril, thank you very much indeed with a check on the markets and the catch-up coming through for Chinese stocks. Too cheap to ignore. Avril Hong, thank you. Let's check back in on the geopolitics then, because the redhead that crossed just in the last few minutes, Israeli military has asked some civilians in Rafah to move out of the city. We know, of course, and we've listened in to Netanyahu of Israel, of course, has suggested that they remain determined to clear out that city because of the Hamas battalions that Israel says continue to shelter there. But we also know, of course, that there are hundreds of thousands of civilians within that city. Israel has said it will enable the evacuation evacuation of civilians. Of course, critics have suggested that that will be challenging, to say the least. The talks, of course, within the context of those ceasefire talks that have continued over the weekend, but have also, we know, stalled. Let's get the details then with Bloomberg's Paul Wallace standing by in Dubai. Paul, how significant is this then? Israel's military asking some civilians in Rafah to move out of that city.
Hi, Tom. It is very significant, I think, and it could well be the prelude to an offensive on the city that Israel has promised for months. It always said that this would be the first step, that civilians would be moved out before any attack on the city. We have little idea how long this process would take, and there's some debate within the Israeli government and military. Back in February, there was optimism among the Israelis that it could be quite a short process, a matter of days, before the bulk of the roughly 1.4 million civilians in the city are moved out safely. More recently, however, they've extended that time frame, and a lot of Israelis now admit, at least in private, that it will take much longer, perhaps even up to a month. We have to await more details from the IDF on exactly what they're doing right now and over the coming days. But certainly, this is the first time they've announced any sort of evacuation of, as they call it, of civilians from the city of Rafah.
And this following, of course, those talks around a potential ceasefire that have been taking place over the weekend in Cairo. Paul, what is the latest in terms of those conversations, and how do we think about what's happening right now and how that ties in to those negotiations?
Well, as you mentioned at the start of this clip, those talks look like they have stalled, that they didn't make much progress in Cairo. The big obstacle was Hamas's demand that any truce is effectively permanent and ends the war. Israel says that cannot be the case under any circumstances, because there's still battalions, or there's still, let's say, formal military structures of Hamas in the city of Rafah, which is why Israel and Prime Minister Netanyahu are so focused on the city. They say that even if there is a truce, that the war must continue until those roughly 5,000 to 8,000 Hamas fighters are destroyed as military units. I think it's quite telling that the IDF has announced this evacuation today. I think it does suggest that the talks really didn't go well in Cairo. The other thing to note is that there was a deadly rocket barrage by Hamas yesterday on the Kerem Shalom border crossing between Israel and Gaza that killed 3 IDF soldiers. That's the most major, or that's the worst rocket attack for some time from Hamas. So I think everything in the past 24 hours points to the truce talks not going anywhere. If anything, they've regressed.
OK, Paul Wallace, thank you very much indeed for the update out of the region. A story, of course, we continue to monitor. Now, Asian stocks are rising on revived bets that the Federal Reserve will cut rates this year. Bloomberg's MLive strategist Mark Cranfield joins me now with the latest. What is the cross-asset message then, Mark, from what we got through in terms of the jobs data, the softer print on Friday?
It was pretty much a Goldilocks event as far as risk assets are concerned. Treasuries will be relieved that the number wasn't so high that it questions the idea that there could be another rate hike this year. That's pretty much completely taken that off the table. Jerome Powell, of course, had already said during the FOMC that he wasn't expecting higher rates, and that really looks like the case is definitively now after the US jobs number. So Treasury bonds very happy with it. Equities, of course, very pleased because the US economy is still humming along very nicely. Jobs are being created, but not too many, so it's not overheating. And then in terms of the US dollar, because Treasury yields came down slightly, that obviously helps to cap the US dollar. So all in all, it was a near perfect scenario, a very benign case for risk assets. And you see a continuation of the good mood going on in Asia today. But in terms of thinking that this sets the stage for early rate cuts in America, I think people need to back off a bit from that. This really is not the case at all here. There's a very long way to go. And the inflation part of the story hasn't changed yet. I mean, just because the jobs data, we're still talking about 3.9% unemployed, which is a number which usually the Fed would never lower interest rates at such a strong employment situation. So it really needs the inflation data over the next few months to come down, and come down quite quickly. Otherwise, the Fed will still be looking at the fourth quarter for their first rate cut.
OK, a Goldilocks report, but maybe the market's getting ahead of themselves and starting to get excited once again about the prospects of cuts. How does the Fed story then, presumably this is some relief to those sitting in Tokyo within the Ministry of Finance, the Bank of Japan. The risks around intervention, though, arguably still in the cards. 153 currently on the Japanese yen. How does that tie into the intervention story, Mark?
Yeah, I mean, here we are. It's a week after dollar yen touched 160. And we've made progress. The yen is stronger, but it's not overwhelmingly. I mean, markets won't sit back and say, well, that's the end of the story. The yen is a clear case of appreciation all the way from here. It's nothing like October 2022, when 1-2 weeks after the big round of intervention, everybody sat back and said, yes, we'll never short the yen ever again. But you can see in the data that came through on Friday from the CFT, the short positions are still very, very large. It's only a snapshot of the overall market, but clearly leverage traders are not giving up on the idea that the Japanese yen is still the best carry trade in the market. And the reason, of course, is the Bank of Japan. The Bank of Japan still need to come through with a much more aggressive tightening of interest rate policy, to raise interest rates by 10 basis points and then to look as though the job is done really is not going to convince foreign exchange traders for very long. So we need to see a lot more, hear a lot more from the Bank of Japan in terms of what they're going to do in the months ahead. Otherwise, we'll probably be talking about dollar yen being much higher within a couple of weeks.
Bloomberg M-Live strategist Mark Cranfield, thank you very much indeed. Breaking down the implications, of course, of the jobs data coming out of the US, 175, below the estimates, of course, and with that eye still on the intervention question around the Japanese yen. Mark, thank you. Some breaking lines around the IT company that is so central, of course, to France, that struggles with its debt woes. This coming through from Atos, getting an offer from bondholders Bain, Kretinsky and OnePoint. This is part of its restructuring proposals for Atos, of course, listed in France as part of that current conciliation process. The new proposals around the debt were apparently presented to Atos's board of directors on May the 5th, so yesterday. It included a group of bondholders and banks from the company's banking group and including Bain Capital. The company says it will not pursue talks with Bain Capital, but it did sign an agreement around 100 million euros in terms of interim financing with bondholders. There's also an agreement on financial restructuring solution that apparently is acceptable to financial creditors, targeted for May the 31st. So a few more details coming through as Atos, of course, attempts to get some clarity in terms of its debt and liabilities. Again, getting offers from creditors Bain, Kretinsky and OnePoint. Coming up later this week, it is a big earnings week, of course, once again, with the focus on Disney in the US, but arguably the big one in Europe is going to be UBS. Those earnings, of course, coming out Tuesday. The details, of course, as we continue to watch the integration of Credit Suisse and how UBS is navigating that. Then on Thursday, the central bank, of course, after the RBA on Tuesday, it is all about the Bank of England. That decision coming out on Thursday with the monetary policy report from the Bank of England as well. Will they go in line with ECB with a focus on June, or will they hold for slightly longer than that? We've been hearing slightly dovish comments from Andrew Bailey of the BOE. Friday, UK. We're going to get UK first quarter GDP as well, expected to show that we are out of that recession. That detail and that data out on Friday out of the UK. Coming up, though, China's Xi Jinping touches down in Paris for his first EU trip in 5 years. We're going to take a look at what he's aiming to achieve. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday. Now, Chinese President Xi Jinping is in Paris as he kicks off a three-nation trip to Europe. His first visit to the region in 5 years is aimed at stabilising ties in the face of mounting trade tensions. Let's get more then from Bloomberg's Caroline Connat, who's standing by in Paris covering all of this for us. Caroline, what does the French president then hope to achieve from this visit?
Tom, for President Emmanuel Macron, it's clearly a charm offensive here today and tomorrow in Paris and in the southwest of France. Last year, remember, Macron also went to China for a state visit. That was seen as a way to counter the US on the international stage. It's Macron's turn to do the same. There will be the official part of the trip with a military parade today, a state dinner, of course, at the Élysée Palace, but there will also be a more personal touch. Remember, last year, Xi took Macron to the province of Guangdong, where his father used to be a governor, for a ceremony of tea. There will be a similar personal touch with Macron. Tomorrow is taking him to the Pyrenees Mountains, where he used to go as a child. So there is reciprocity in the symbols, but also politically, as you know, there's been a lot of trade tensions between the EU and China. Macron called over the weekend in a long interview with La Tribune for an aggiornamento, which means in Italian a reset, an update of the economic ties with China. But he knows he can't go all alone. He has to give a European dimension to the trip. So this morning, the president of the EU Commission, Ursula von der Leyen, will also be in Paris for a trilateral meeting with President Xi.
That's really interesting. So rich in symbolism, as you say. But in terms of trade, slightly frameworked, of course, by Brussels and broader Europe. How is the trade conversation likely to evolve between these two partners within that context then, Caroline?
You know, going on a charm offensive does not mean that you cannot carry a firm message, and that's what Macron intends to do. In fact, France has been specifically hurt by the recent Chinese probe into cognac makers, which is directly targeting Paris, given France represents 99% of the cognac market. But as you mentioned, there's a lot of EU probes into Chinese EV makers. First, that's also, of course, impacting competition with the likes of Stellantis and Renault, which are also trying to break into the EV car market in Europe, and also more recently into the procurement for medical devices in China. So a lot of probes into all these Chinese companies. For President Xi, the goal of this trip is to, of course, avoid any new tariffs, any restrictions of access to the European market. You know, there are thousands or even tens of thousands of Chinese EVs waiting in Belgium ports, waiting to be sold into the European markets. So that will, of course, be very high on the agenda for those discussions. Macron has pledged a very different approach to Olaf Scholz, the German Chancellor, for example, who also visited China last month. He's been much more pragmatic. He said over the weekend that whether it's for climate, whether it's for safety, we need the Chinese.
OK, Caroline Cornat in Paris, following, of course, Xi Jinping's visit to the country. 3 days in France before moving on to Hungary and Serbia. Caroline, thank you very much indeed. Now, Bloomberg has learnt that CICC is planning to demote some of its senior bankers and cut their pay. The unusual move could lead to voluntary departures from one of China's largest investment banks. Sources say CICC has told staff internally that some individuals could lose their managing director titles and be relegated to lower ranks under a new performance rating system. CICC has been slashing bonuses for the past 3 years amid a slump in deal making. It was a company that was once referred to as the Goldman Sachs of China. Coming up, LIV Golf CEO Greg Norman says the Rebel League isn't going away as talks about a possible merger with the PGA drag on. More from my exclusive interview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, LIV Golf CEO Greg Norman says the Rebel League will continue expanding as questions remain over a potential merger with the PGA. He spoke exclusively with Bloomberg's Linda Armin on the sidelines of the LIV Golf tournament in Singapore.
Greg, it's also about access to the game. And here, there needs to be the streaming distribution channels. How are you looking at that?
We are looking at that right now.
What exactly are you looking at? Are you in talks with anyone?
Yeah, absolutely we are.
Give us a sense of who you're in talks with in terms of distribution, in terms of streaming, because there are opinions out there suggesting that perhaps people are not really tuning in and watching LIV. How do you respond to that?
Well, what's the definition of tuning in? Turning on the TV and turning on the channel 44 and say, okay, I'm going to watch the next 4.5 hours, that's tuning in, right? But to an 18-year-old, to a 25-year-old, tuning in may be 12 seconds on the phone. Okay, let me see this, then I'm going to go back and do that. Oh, and then I'll come back over here and do another 14 seconds on this. Boom, that to me is tuning in. That to me is a market that's enormously wealthy, right? And enormously influential in the direction where you're going. So look, we are talking to corporations. I'm not going to give you the names of those corporations, of course, but we just did a great partnership with Google.
The reality right now is that there is a great divide in pro golf, PGA and LIV. Negotiations are ongoing. Is a decision imminent, you think? I mean, from your perspective, how are you looking at it? Is it important that there is a merger or not?
Look, I'm just going to answer as CEO of LIV. My boss told me LIV is not going to go anywhere. It'll be well and truly in operation, running well past his death. Now, he's a young guy, so he's asked me just to stay focused and deliver LIV. LIV is a standalone entity. He's invested billions of dollars into this, and we're starting to see the creation of an ROI within this. So we're going to stay focused over here.
OK, LIV Golf CEO Greg Norman there. Now, the full exclusive interview on LIV's golf's plans for the future will run in the next edition of Latitude with Haslinder Armin airing in June. Sticking with sport, the prospective buyer of England's Everton Football Club has been accused of fraud. Lenders to 777 Partners claim the Miami-based investment firm borrowed against $350 million of assets that it didn't own, didn't exist, or were already promised to someone else. The fund has been thrust into the spotlight after it moved to take over Everton last year. The acquisition was held up by a Premier League inquiry into 777's funding. The league has since signalled it will approve the deal subject to a number of conditions. 777 has been approached for comment. Coming up, heading for $200 billion. Berkshire Hathaway's cash pile hits another record high. The highlights from the annual meeting of Warren Buffett's conglomerates. His views on Apple, of course, Paramount as well, and optimism around the prospects in India. All that to unpack from Berkshire Hathaway and what we heard from Warren Buffett. That is coming up next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London, and these are the stories that set your agenda. Asian equities gaining after softer than expected US jobs data revives bets the Fed will cut rates this year. The Israeli military is reported to have started moving civilians out of Rafah as preparation for a ground invasion moves forward. This after Israel closed a humanitarian crossing into Gaza following a barrage of rockets fired by Hamas. Plus, Xi Jinping touches down in Paris to begin a three-nation European tour as French President Emmanuel Macron seeks to reset ties with Beijing. Let's check in on these markets then. Investors continuing to digest the jobs data in the US. Softer than expected, a print of 175,000 coming in well below the estimates. The unemployment rate ticking up to 3.9% and the average hourly earnings coming in below the estimates as well. And that is crucial in terms of considering where the Fed goes next. So repricing, and currently the expectation that the Fed could go twice in terms of cuts this year. European futures then pointed to gains of 0.2% for the week. They closed lower last week. US futures currently flat for the week. Last week they actually added gains, but still around 2%, a little over 2% below the records reached in March for the S&P. But it was a solid session on Friday. NASDAQ futures currently just down 0.1% after ending with gains of around 2% on Friday. Big week, of course, for the earnings story as well. UBS with the details tomorrow and Disney out of the US. Let's flip the boards, cross-asset then, focus in on the US dollar right now. The Bloomberg dollar index just up 0.1%. The pound at 125, a big week, of course, for the Bank of England and that decision on Thursday. Brent $83.31, up 0.4%, with the focus, of course, on what is emanating out of Israel and Gaza and those ceasefire talks. And iron ore getting a pop in the session, up 1.5%, that being linked to some comments from Chinese officials around additional support for the property sector. Geopolitics is in the lens for us again today on these reports that Israel has started to move some civilians out of that city of Rafah, where we know that well over 1 million civilians are sheltering. The shekel then currently lower by a full percent versus the US dollar. So the Israeli currency moving sharply lower on the back of this news. It seems like it could be a prelude then to that attack on Rafah that, of course, the Israeli government has been flagging. On the X platform, the Israel Defense Forces saying they will act with extreme force against terrorist organizations in your areas of residence, addressing the civilians in Rafah. Now, the Financial Times is reporting that Credit Suisse CEO Ulrich Körner is set to leave UBS in the coming weeks after the completion of the merger of the two former Swiss rivals. According to the newspaper, UBS is working to complete the integration of Credit Suisse by the end of this month. The Swiss government last year orchestrated, of course, the UBS takeover of Credit Suisse as it was teetering on the edge of collapse. And, of course, the earnings from that company coming through tomorrow. Meanwhile, Warren Buffett has praised Apple even after revealing he's cut his stake in the tech giant. Buffett disclosed the move during Berkshire Hathaway's annual meeting in Omaha, the first since the death of Charlie Munger.
We will have Apple as our largest investment. But I don't mind at all, under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets and I look at the composition of what's going on in the world, we find it quite attractive.
OK, for now then, let's bring in deals reporter Manuel Baigorria. Now, Manuel, I'm not sure if you saw the pictures there, but it was some nice product placement with Sears candy box on the desk in front of Warren Buffett. What did we hear in terms of the Apple story then? Buffett, a strong believer in this company, but cutting his stake. What came through for you?
Yeah, Tom, definitely. We were just discussing in the newsroom today. It was just like the holding was reduced by just simply $40 billion, right? Quite amazing. I mean, still remains the largest investment by Warren Buffett, and he's a strong believer in the company. He also mentioned how the iPhone might be perhaps one of the greatest inventions in history. And I mean, he hinted that there were some tax implications, and he had already sold some shares in the fourth quarter already. So he's been reducing the exposure into Apple, even though he remains a firm believer in the company. He was mentioning just now how when he sees out alternatives, there isn't any clear alternative out there. I mean, Apple has been faced by some challenges on its own. The shares are pretty muted so far this year. I mean, we saw the antitrust, $2 billion antitrust fine, also slumping sales in China, for instance, among other things. But all in all, I mean, it remains a very large investment by Warren Buffett, definitely.
And look, you touched on this, the cash hoard, and it just continues to grow, the cash pile for Berkshire Hathaway. And he flagged that it could hit $200 billion in the near future. Why is Buffett holding on to so much cash? Is it that lack of deals that's leading him to being risk averse, or at least not wanting to pull the trigger on some of that cash?
Yeah, definitely, Tom. I think that was perhaps one of the main topics of discussion during the meeting over the weekend. I mean, it's fast approaching the $200 billion mark, and that's a lot of cash in hand. I mean, I think, as you rightly pointed out, there has been a dearth of sizable deals. He's well known for doing big deals in the past, and we haven't seen a big one in a while. So that's part of the reason. But also, given volatility in the stock market, also the geopolitics, inflation remaining pretty high, and also the uncertainty around interest rates. I think all those uncertainties are also leading to Warren Buffett hoarding that big amount of cash, and remains to be seen whether he'll be able to deploy a big check into some M&A, but nothing for the time being, definitely.
OK, Manuel Baigorri, thank you very much indeed. Well, what you heard, of course, from Berkshire Hathaway and Warren Buffett over the weekend. We appreciate it. Now, Chicago Fed President Austin Goolsbee says the latest US jobs report gives him comfort that the economy is not overheating. But when it comes to possible rate cuts this year, he says he still needs to see more data confirming that inflation is under control.
175,000 is a very solid report. Some of the root of our frictions here might be there's a kind of a day trader's timetable and there's an economic timetable. For setting monetary policy, of course, you got to take a longer arc view on inflation, on employment, and we're just trying to figure out, after the excellent dual mandate performance of 2023, let's call it, where inflation fell almost as much as it has fallen on record, and did so without a recession. How much can we continue that into 2024? We hit a bump for sure at the start of the year on the inflation front, and now everybody's just got to take a step back and try to figure out, is that a sign that the economy's overheating, or is that a sign of some other thing? The more jobs reports you get like this, where they're solid, but it's clearly moving back into something that looks like pre-COVID and conventional times, the more confident we can be that the economy's not overheating. But we just gotta watch this.
You are one of the I don't want to use the word dovish, but more optimistic people about the possibility that rates could be cut this year. How do you feel now? We do see this slowdown. The ISM numbers show slowdowns. Spending numbers were lower than anticipated and lower than in the last quarter. Are we setting up to go back to the idea that rate cuts are going to happen this year?
I don't like committing, tying our hands of, even for the next meeting, much less when it comes to the fall and going into next year. I will say I was optimistic in 2023 that we could hit what I was calling the golden path, that there were reasons why, in an unprecedented way, we potentially could get inflation down significantly without having a big recession, which previous to 2023, that really doesn't happen. We did that in 23. As we're looking in 24, like I said, we clearly hit a bump at the start of this year, and we've just got to get comfort that it's not a sign of a re-acceleration of the economy.
OK, Chicago Fed President Austin Goolsbee speaking with our colleague, of course, Mike McKee. Let's bring you back and focus in on what is happening, of course, in terms of Gaza. And the context is that ceasefire talks that have been happening over the weekend in Cairo between Israel and Hamas, coordinated, of course, by Qatar and the US, seem to have stalled. And now what we're seeing are reports that Israel, and confirmation that the army of Israel, the military, has now put an evacuation order on 100,000 civilians in Rafah. 100,000 civilians are under an evacuation order, according to the Israeli military. They say there is a limited scope operation in parts of Rafah right now, which, of course, is a densely packed city, well over 1 million civilians packed into that city. They're saying also that the Kerem Shalom opening and crossing into Gaza remains closed. We know, of course, there was a Hamas attack that led to the deaths of a number of Israeli military personnel over the weekend. There's no change to the aid flow, though, according to the Israeli army. Again, the consequential line is that the Israeli military has asked some Rafah civilians to move out of that city, it seems, in preparation for an attack on Rafah, where, of course, Israel says there are Hamas battalions sheltering. The Israeli currency drops its most in about 2 weeks, 1.1% currently lower versus the US dollar, a little over 1%, I should say, versus the US dollar in terms of the moves for the Israeli shekel. We continue to monitor this story for you on the oil implications. Oil is higher in the session today. Brent up 0.4% at 83.32. WTI at 78.48, up 0.5%. This is a move, of course, that the US has warned against in terms of a potential attack on Rafah, as has the European Union. We continue to monitor this story for you. Coming up, Labour sweeping the UK local elections, heaping more pressure, yet more pressure on the UK Prime Minister Rishi Sunak. We explain what it means then for that impending general election. That is next. This is Bloomberg.
Sadiq Khan has been duly elected as Mayor of London.
An historic third term in the capital for Labour's Sadiq Khan, adding to a weekend of woe for the Prime Minister, Rishi Sunak. The results of England's local election show that the Labour Party is on course to win the next general election, expected to be held later this year. The Conservatives lost over 470 council seats across England. Labour gained over 180. And of the 11 regional mayors up for election, 10 victorious candidates were Labour. The one chink of light for the Prime Minister, the Conservative Mayor of Tees Valley, Ben Houchen, clung on. But down in Brexit-backing Blackpool South, another defeat for the government. The parliamentary by-election there seeing the only Westminster seat up for grabs going to Labour. This was the last major test of public opinion before a general election, which has to be held within 9 months. But so far here in Westminster, the threat of a coordinated move to oust the Prime Minister seems to have receded. Instead, his right-wing party critics signalling they want Sunak to own these losses, and the larger one that's expected to come.
Labour have been maintaining this 20-point lead, and ever since Rishi Sunak, the third Prime Minister of this Parliament, came into office, there's nothing he's done that's been able to move that lead. In fact, if anything, things have got slightly worse.
It wasn't all plain sailing for the Labour Party, though. Signs the opposition is losing support among some communities because of its stance over the conflict in Gaza. Rishi Sunak insists that he is soldiering on. These results, though, suggest the public is hungry for change.
OK, Bloomberg's Alex Morgan reporting. For more on this, let's bring in Ros Mattison, then, Bloomberg's news director in the EMEA region. So, Ros, as Alex was laying out for us, the threat of a challenge from within his own party seems to have receded from the UK Prime Minister. But your key takeaway in terms of just how bad this has been for the PM and his party as we lead up to that general election, what is the top line for you?
Well, it's very interesting. You now have Prime Minister Rishi Sunak talking about minority government. They may lose a majority, and then can he cobble a minority government? That's an acknowledgement of just how bad things are for the Tories in the runway to this election. The question also is, when does he call it? He's got a limited amount of time until he has to have the election. Does he want some breathing space now to try and let this all settle down? Does he want to wait till the very last minute? And then he's forced to call an election, possibly at the worst time for him. So really, he's running out of road here. He needs to do something that's going to regain these voters, going to not just, Labour's taking voters, but also even his very right flank potentially taking voters away. So he's bleeding voters on either side. What can he do at this point to rally the ship for the Tories, at least to mitigate what looks to be, on course for a Tory loss in this election later this year, expected later this year? But again, Sunak saying, really acknowledging that he could be facing the effort to try and form a minority government.
What do we expect then from the British Prime Minister in kind of the days and weeks ahead as he looks to kind of try to reset the agenda that presumably is in the cards for him and his team, the desire at least to reset that agenda? Do we know what the next steps are going to be given the challenge of this result?
Well, it's interesting because we can see many in his party, at least the far right, are urging him to tack right. And that means more curbs on immigration, certainly pulling out of more of the European Court of Human Rights. That's been a long one for some on the very right flank of the Tories. So they're saying tack even further to the right, differentiate yourself, shore up that side. But it really was the left that took the votes away. It wasn't just Labour, it was the Greens, it was the Lib Dems, some of these other parties. And that suggests that voters are swinging a bit, that they could still be brought back to the Tories, because haven't gone completely to Labour. They're fiddling around with some of the other smaller parties, so their vote's up for grabs. But it's interesting to see many of these parties saying, no, you need to go really to the right, separate yourself completely for Labour, throw it all in at this point, may as well, why not? And really especially go hard on immigration.
Yeah, and a different message from the outgoing mayor of Birmingham, of course, suggesting that there was a moderate approach that should be taken by this Conservative Party. So that debate remains acute, doesn't it, within the Tory party. Ros Madsen, thank you very much indeed on the consequences, of course, these local elections in what is, of course, very likely to be a general election year, almost certainly here in the UK. So a big and wider implication, of course, for the UK Prime Minister and the Conservative Party. Ros Madsen, Bloomberg's news director in the EMEA region. Staying with the UK, and the Bank of England may offer a clearer signal in the coming weeks on whether it plans to cut interest rates this summer. In fact, that signal may come through on Thursday, of course, with its rates decision. Let's bring in Ven Ram from our Bloomberg LIV team then. The BOE decision on Thursday, Ven, what are you expecting? We've been hearing dovish comments from Bailey. Is he expected to double down on that? Is this a more dovish BOE that we're looking at?
Well, it's certainly a remarkably dovish BOE that we are looking at, Tom. But, this week, I don't think they will have too much headroom to go hammer and tongs on the theme of dovishness just yet, because we will need to wait for the April inflation data, and that is going to be crucial for the BOE's calculus. The Bank of England thinks that, the April inflation data will give them the go-ahead to cut rates later in the year, but we need to wait and watch. Headline inflation has cooled a lot, but it is the core inflation metric and the services inflation metric that matter a whole lot. Core inflation is running north of 4%. Services inflation is nudging around 6%. So you've got a policy rate at 5.25. So you've got to ask yourself, what is the real policy rate? The real policy rate is probably about 90 basis points if you look at core inflation, and it's negative if you look at services inflation. So the headroom for the BOE to cut rates isn't a whole lot from here.
OK, interesting. Limited headroom. When it comes to other central bank decisions, what are you looking at then?
Well, I mean, we've got the RBA meeting tomorrow, Tom, and we had a pretty nasty inflation surprise out of Australia for the first quarter, where core inflation came in higher than anyone expected on the street. The markets were thinking, look, the RBA may be able to cut rates later this year. Now, that sole inflation print has wrecked the market narrative. Now the markets are thinking probably the next move is, in fact, going to be a hike. And we've got the Swedish central bank meeting later this week as well. But I think that, for all the central banks in the region, I think that Sweden and Switzerland have the greatest room to cut policy. And we may well get a rate cut from Sweden because the economy is going quickly downhill and inflation is also pretty well behaved. OK, potential cut coming through from Sweden as we look ahead to the BOE, but the restricted room for the Central Bank of the UK with that decision on Thursday, setting us up very nicely, of course, another big week for those central banks. Ven Ram from Bloomberg's LIV team, thank you. We're going to bring you, of course, coverage of that BOE rate decision and Andrew Bailey's news conference on Bloomberg TV this Thursday. That's from 12 p.m. UK time. Plenty more coming up. This is Bloomberg.
This couldn't have been scripted better. This report runs the tables for a good report.
A Goldilocks report that will please the Fed and please the markets.
This is a good report across the board for validating what we heard from Jay Powell on Wednesday.
People were starting to be concerned that we needed more hawkishness from the Fed. We did not get it on Wednesday. We got a more muted version of what's going on. And I think that this data is starting to prove that out.
Now we're pricing in 2 cuts for the year. I think that's about right.
People were looking for a little bit of a slowdown because they don't want to have to think about rates staying high for much, much longer, and they don't want to think about a hike. They want to start thinking about easing. This puts that back on the table. You've already seen those odds go higher this morning.
I think the Fed would like to get a cut or 2 in this year, and today opened the door for them to get that done.
OK, some of our guests there on those US jobs numbers. A Goldilocks report coming through, of course, on Friday last week. But again, underscoring the view that this is a Federal Reserve that can now reconsider the prospects for cuts. The market's pricing in close to 2 now this year, and odds on basically split in terms of September. The odds are split in terms of where they go in September. Again, the market's now pricing in close to 2 cuts because you've got a number that came in well below the estimates, but importantly as well, the average earnings that came through much lower, the lowest, in fact, in terms of the increase that came through on average hourly earnings since June of 2021. We know that is being scrutinised, of course, by Fed officials. The top line was 175,000, well below the estimates of 240,000, and it follows what many perceived as relatively dovish comments from Powell on Wednesday of last week, of course, where he suggested it was very unlikely that the next move would be a hike from the Fed. Mark Cranfield pointing out that the stickiness remains within the inflation components, of course, in terms of the data out of the US, but you did see that move, sharp move again at the front end in terms of yields lower and bonds bid on the back of that data. Switching focus again and just recapping what's been coming out of Rafah, of course, the Israeli army saying that 100,000 civilians are under evacuation order. This is a key story we continue to monitor for you. The shekel is under pressure. Oil is up on the back of this news. It seems like Israel is preparing for that military move into Rafah, of course, where well over 1 million civilians are sheltering. That evacuation order coming through after talks appeared around the ceasefire to have stalled over the weekend in Cairo. There's plenty more coming up on this story and, of course, the broader market context. Markets Today is next. This is Bloomberg.